Alright, good morning everyone. Before we start with our lecture, may I invite everybody to please offer some moment of silence and let us all together pray the FEU prayer. In the name of the Father, and of the Son, and of the Holy Spirit, Amen. Direct, O God, we beseech you, all our actions by your holy inspiration, and help us on by your gracious assistance, so that every prayer and work of ours may begin with you, and by you be happily ended. Amen. In the name of the Father, and of the Son, and of the Holy Spirit. Amen. Good morning again, ladies and gentlemen. Maayong buntag, kanatong tanan, magandang umaga po sa kanilang lahat. One more time, this is Sir Bryce speaking. Kamusta po kayo? I hope that you are all safe at the comfort of your homes despite of the crisis that the whole nation is facing right now. And as I have said in our live online lecture last time, we are going to continue with problem number 11 until the last problem that we have in this handout, and this will be done through an uploaded video lecture. All right? So please watch the video. Please watch the uploaded video lecture. And if you have questions, please don't be shy to raise your concerns to me. I am going to answer your concerns once I get your message. All right? And before we start, let me have a conceptual discussion first of the capital asset pricing model. If you still remember, when I discussed the costs of common equity, I was telling you the costs of common equity may either use your Gordon model and your capital asset pricing model. And we are already done under the Gordon model. Therefore, this morning, let me now proceed to the capital asset pricing model. All right? Guys, let me assume a simple example for the understanding of everybody. Well, okay? May I assume that your risk-free rate, we have over here, your risk-free rate. Okay? Guys, ano yan? RFR. RF would mean risk-free. Okay? Risk-free, and then the R is rate. Ibig sabihin niyan, that is risk-free rate. Okay? Sabihin na lang natin ang risk-free rate ay 3%. Okay? Guys, anong ibig sabihin ng risk-free rate na 3%? Kaya nga po siya tinawag na risk-free because that is the level of return that you are going to generate if you place your investment in a non-risky investment. Sa madaling usapan, okay? Kung ilalagay mo ang pera mo sa investment na hindi risky, ang return lang na ma-generate mo ay 3%. Okay? What if you are going to place your money in a risky investment? What is the level of return that you are going to generate? The level of return that you are going to generate is equal to the return of the market. Ang tawag po natin doon, market return. RM. What is M? Market. What is R? Return. Say for example that your market return is 8%. Guys, these are just assumptions, okay? So that I will be able to deliver the concept. Anong ibig sabihin, sir? Kung hindi risky ang investment, 3% lang ang return mo. Kung risky ang investment, 8% ang magiging return mo. Okay? Guys, iyan po ang sinasabi natin, the higher is the risk, the higher is the return. Alright? Guys, di ba K means costs? Okay? This cost of capital, this cost of common equity is computed. Your cost of capital is computed, it must be equal to the risk-free rate. Sir, ano yung risk-free rate? E de yung 3%, okay? Sa madaling usapan, ang cost of capital mo pala equal lang sa risk-free rate. That is the case if you are going to place your money in a non-risky investment. Sir, what if I place my money in a risky investment? You are going to demand more. Remember risk-averse attitude? Ano nga ulit ang sabi natin sa risk-averse attitude? Pag tumaas ang risk, kailangan tumaas din ang return. Alright? Ngayon, kung risky ang investment, hindi ka papayag na 3% lang ang ma-generate mong return. Okay? There must be an additional premium. Okay? And guys, how are we going to measure your premium? We have to adhere to the difference between the market return and the risk-free rate. Okay? Guys, kung titignan mo, makinig mabuti ha, ang risk-free rate, ang risk-free rate natin 3%. Ang market return natin 8%. Ang risk-free rate 3%. Okay? Therefore, kung titignan mo, 8 minus 3, that is 5%. Okay? And then 3% plus 5%. Okay? Ibig sabihin, you are demanding 5% more. Kung hindi risky ang investment, okay na ako sa 3%. Kung risky ang investment, hindi ako papayag ng 3%. Dapat may additional. Ilan ang additional? 5%. Sir, anong basis ng 5%? Okay? Guys, that is the difference in order for you to reach the return of the market. Ibig sabihin, nanghihingi ka pa ng mas marami kasi 8% ang return ng market. Kung non-risk ang investment, 3%, manghingi ka pa ng 5% to equalize the return on the market. Pero alam mo, okay, whatever is the premium that you are demanding, which in this case is 5%, it must be multiplied by beta. Okay? Guys, what is beta? Beta, I would like to note, is a measure of risk. Okay? Tandaan mo, your beta may be greater than 1, your beta may be equal to 1, or your beta may be less than 1. Sir, ano pong interpretation ng beta? Makinig mabuti. Okay? Alam mo, pag sinabi mong ang beta is greater than 1, say for example, your beta is equal to 2. Sir, anong ibig sabihin ng beta na 2? Kasi pag sinabi mong 2, 200% yun. Okay? Now, if your beta is equal to 2, ang ibig sabihin po nun, okay? If the market is rising, your investment is also going to rise. And the rise in your investment is twice of the rise in the market. Kapag tumaas ang market, tataas ka rin. Ilang beses kang tataas? 2. Beta is 2. If the market is falling, your investment is also going to fall. And the fall in your investment is twice of the fall in the market because your beta is 2. Sir, what if beta is equal to 1? Anong interpretation? 1 is 100%. Therefore, if the market is rising, your investment is also going to rise. And the rise in your investment is equal to the rise in the market. That's 100%. If the market is falling, your investment is also going to fall. And the fall in your investment is equal to the fall in the market. Sir, what if the beta is less than 1? Say for example, 0.5. If the market is rising, 0.5 is 50%. If the market is rising, your investment is going to rise. And the rise in your investment is only half of the rise in the market. If the market is falling, your investment is also going to fall. And the fall in your investment is only half of the fall in the market because your beta is 0.5. Why do I have to explain this thoroughly? Okay? Alam mo kasi, may mga problem. Sasabihin ng students and even the examinees in the CPA exam, sasabihin nila, walang beta ang problem, bonus. Hindi po Okay? Guys, unless the problem is defective. Okay? Hanap ng hanap kung ano ang value ng beta. Sinabi na nga ng problem, the investment is equally as risky as the market. Anong ibig sabihin ng sentence na yon? The investment is equally as risky as the market. The beta is equal to 1. Huwag kang maghahanap ng beta. Hindi sa lahat ng pagkakataon ibibigay sa iyo ang value ng beta. Sometimes you need to read between the line as to what is the value of beta. Alright? Guys, may I ask you, the higher is the beta, the blank is the risk. Okay? Ano po yon? Pag mataas ang beta, anong mangyayari sa risk? Mataas din. Sir, bakit? Abay sabihin ko kaya sa iyo ang beta mo 10. Biglang bumaba ang market, edi 10 times kang lulubog. Tama? Pag mataas ang beta, mataas ang risk kasi in bad times, talong-talo ka doon. Okay? Guys, the higher is the beta, the higher is the risk. The blank is the return. Anong mangyayari sa return? Edi higher pa rin. Sir, bakit? Sabihin ko kaya sa iyo ang beta ay 10. Biglang tumaas ang market, edi 10 beses kang tataas. I-assume mo, ang beta 10, tumaas ang market, 10 beses kang tataas, mataas ang return. I-assume mo, ang beta 10, lumubog ang market, 10 beses kang lulubog. Okay? Mataas ang risk. Okay? The higher is the beta, the higher is the risk, the higher is the return. Alright? And you know, just for purposes of explaining it well, alam mo kasi, okay? Ganito po yan. Itong the difference between market return and risk-free rate, ang tawag po dyan, market risk premium. Okay? Guys, yung market risk premium, pag minultiply mo ng beta, ang tawag po dyan, risk premium. Okay? Again, yung inner parenthesis is the market risk premium. When that is multiplied by beta, that is what we call your risk premium. Alright? And this is the way on how we are going to compute for the value of beta. This having been said, let us apply this to problem number 11. Everybody, attention now. Use the basic equation for the capital asset pricing model to work for each of the following. Find the required return for an asset with a beta of 0.8 when the risk-free rate and the market return are 5% and 10% respectively. Okay? Guys, binigyan ka ng market return, ng risk-free rate, binigyan ka ng beta. Ang tinatanong required return, nasabi ko na ito last meeting, ang sabi ko ang required return is just another term for costs of capital. Therefore, how do we compute your cost of capital under your CAPM? Risk-free rate plus your risk premium, computed as your beta multiplied by the market return minus the risk-free rate. Tama? Substitute, let us try to check. Ang risk-free rate, ilang percent? That is 5%. Tama? 5%. Ang beta is 0.8. Ang market return ay 10%. Ang risk-free rate ay 5%. Therefore, 10 minus 5, it must be 5. Multiplied by 0.8, it must be 4. Plus 5, it must be 9. 9% is your required return. Answer to requirement number 1. Requirement number 2. Find the beta for with a required return of 9.75% when the risk-free rate and the market return are 6% and 9% respectively. Guys, this time, ang nawawala po ay beta. Okay? Kung beta ang nawawala, binigyan ka ng required return and that is 9.75%. That is your cost of capital. Let us now proceed to requirement number 2. How do we compute your cost of capital? Your cost of capital is computed risk-free rate plus your risk premium. Your beta multiplied by the market return minus the risk-free rate. Alright? Ang cost of capital, 9.75%. In terms of decimal, it must be 0.0975. Ang risk-free rate, that is 6%. Therefore, it must be 0.06. Ang beta, it must be unknown. Okay? If beta is unknown, let it be x. Therefore, plus x multiplied by the market return is 9%, 0.09. Risk-free rate is 6%, 0.06. Therefore, what do we do? Do the math. Okay? Let's do the math now. It must be 0.0975 is equal to 0.06 plus. Okay, yung inner parenthesis kasi is 0.03. 0.09 minus 0.06. 0.03 multiplied by x, it must be 0.03x. Tama? Therefore, what do you do? Itong 0.06 rather, transpose to the other side, negative. Tama? Therefore, 0.0975 minus 0.06 is equal to 0.03x. Difference on the left side, it must be 0.0375. Difference on, the right side is 0.03x rather. Therefore, what do you do? Divide both sides by 0.03. Tama? Therefore, 0.03 over 0.03, cancel. Anong naiwan? X is equal to 1.25. Alright, our value of beta is 1.25 in this case. Actually, you may recheck. How are you going to recheck the value of beta? Okay, na 1.25. E di substitute mo. Market return 9%, risk-free rate 6%. 9 minus 6 is 3. 3 multiplied by 1.25. Ilan po yun? 3 times 1.25 is 3.75 plus 6, it must be 9.75%. Correct. Alright? And that is to illustrate problem number 11. Let us now proceed to problem number 12. Alright, may I read the problem before I even introduce the concept of weighted average costs of capital. Fatty Paints Corporation has a target capital structure of 40% debt and 60% common equity with no preferred stock. Its before tax cost of debt is 8%. Its marginal tax rate is 30%. The current stock price is 24 pesos. The last dividend was 1.8 and it is expected to grow at a constant rate of 5%. What is the cost of its common equity and the WACC? Guys, anong ibig sabihin ng WACC? Weighted average costs of capital. Alright? Everybody, may I have your attention please? Tapos na tayo sa cost of debt, that is the case of D. Tama? Tapos na tayo sa cost of preferred, that is case of B. Tapos na tayo sa cost of common equity, that is case of E. Okay? Na minsan-minsan kailangan computein natin ang cost of new common stock if ever there is new issuance of common stock, that is case of N. Okay? Guys, ang sabi natin, ang cost ng common equity, it may be computed under Gordon and it may be computed under KM. Alright? Guys, ano naman ang ibig sabihin ng weighted average cost of capital? Kasi di ba ang sabi ko sa introduction, itong preferred, itong common, lahat ng yan sources of financing. Okay? These are capital sources. How do you get the weighted average costs of capital? Alright? How do we get the WACC? Guys, among the costs that we have, there is only one cost which is tax deductible. And that must be the cost of debt. Okay? Sir, paano mo nasabi na ang cost of debt ay tax deductible? Alright? Alam mo kasi, hindi ba ang income statement natin, ganito ang presentation. Tapos ka na sa management accounting, hindi ba? Di ba ang presentation natin, EBIT minus your interest expense, you're going to get your EBT minus your tax expense, you're going to get your net income. Guys, ano ba ang cost of debt? Ang cost of debt, iyon yung interest expense na binawas mo sa EBIT, okay, bago computen ang EBT. Okay? Ano bang basis ng taxes? Yung EBT. Ibig sabihin guys, nabawas na natin ang interest bago mag-compute ng taxes. Kaya ko nasabi na ang interest tax deductible. Alright? Ang cost of debt po ay interest. Ibig sabihin, ang cost of debt tax deductible. Eh guys, ano ba ang cost ng preferred? Ano ba ang cost ng common? Eh the dividend. Guys, ang dividend ba tax deductible? No. Kasi guys, 'di ba, yung dividends declared, hindi naman 'yun pumapasok, okay, sa income statement, okay? I mean, hindi naman pumapasok sa net income computation ang iyong, okay, dividends declared. Actually, in financial accounting, ang dividends declared, that is a direct deduction from retained earnings. Okay? Pinag-aralan mo yan sa corporation accounting. Di ba ang entry mo kapag nag-declare ka ng dividend, debit retained earnings, and then credit dividends payable, okay? Hindi naman yan pumapasok sa net income computation eh. Kaya hindi po siya tax deductible. Alright? Guys, ibig sabihin sa cost of debt, cost of preferred, cost of retained earnings, cost of new common stock, sa apat na yan, isa lang ang babawasan mo ng tax. And that must be the cost of debt. Alright? And so, let us try to check. Everybody, attention please. Alright, your weighted average cost of capital. Wait ah. Alright, your weighted average cost of capital is computed. Your cost of debt after tax. Alright, everybody, attention. Case of D, cost of debt. 80 after tax. Sir, paano mo computein yon? Say for example, 40% ang tax rate. Tapos ang cost of debt 10%. E de, ang cost of debt after tax is 6%. Kasi cost of debt 10%. Okay? Ang after tax nun 60%. Kasi ang tax rate 40%. So 10% times 0.6, it must be 6%. Guys, depende yan sa tax rate na ibibigay ng problem. Okay? Huwag kang mag-a-assume ng kung ano-anong tax rate. Pag nagbigay ang problem ng tax rate, kuhanin mo ang cost of debt after tax. Cost of debt after tax multiplied by the weight of the debt. Okay? Plus your cost of preferred multiplied by the weight of preferred. Okay? Plus your cost of common equity multiplied by the weight of common equity. Well, everybody, attention. Okay, itong cost of debt, itong cost of preferred, itong cost of common equity, tapos na po tayo dyan. Okay? Ang gagawin lang natin sa kanila, pagsasamahin natin sila together by multiplying to the corresponding weight. Eh sir, ano ba yung mga weight na yan? Yung mga nakabox na weight na yan. Okay? Itong weight po na ito, iyan ang tinatawag natin na capital structure. Okay? Guys, anong ibig sabihin ng capital structure? Iyan yung proportion ng debt, preferred, and common. Okay? Kasi guys, ganito eh. Halimbawa, ang capital structure, ang debt 50%, ang iyong preferred 30%, ang iyong common 20%. Kung ganyan ang capital structure, ang ibig sabihin po, every time na mag-i-invest ang company in long-lived asset, okay? Pag mag-i-invest ang company in long-lived asset, 50% ng pondo manggagaling sa debt, sa utang. 30% ng pondo manggagaling sa preferred, 20% manggagaling sa common. Iyon po ang ibig sabihin ng capital structure, kung saan manggagaling ang pondo. Alright? Most of the time, your capital structure is provided in the problem. Most of the time. But not all of the time. Okay? Sir, papaano Kung hindi binigay ng problem ang capital structure, paano ko yun kukomputen? Saan ko yun kukuhanin? Makinig mabuti. Okay? Guys, ganito po siya. In the event na hindi binigay ng problem ang capital structure, it is your task to compute therefore. How do we compute, sir? Okay, ganito po It must be ratio and proportion based on market values. Sir, hindi ko nag-gets. Anong ibig sabihin mo sa ratio and proportion based on market value? Kuhanin mo yung market value ng debt, market value ng preferred, market value ng common, i-add mo. Okay? Pag na-total mo na yon, ratio and proportion. Market value of debt divided by total market value, iyon yung percentage ng debt. Market value of preferred divided by total market value, iyon yung percentage ng preferred. Pero alam mo, okay? Paano natin ko-computein yung market value ng debt? Natatandaan mo pa ba yung computation ng market price ng bonds sa problem 1? Yung market price ng bonds, yun yung market value. Alright? Sir, paano naman yung market value ng preferred? Natatandaan mo pa ba kung paano mag-compute ng price ng preferred? Pag na-compute mo na ang price ng preferred per share, i-multiply mo ng number of shares, iyon yung market value ng preferred. Natatandaan mo ba yung pag-compute ng price ng common share? Pag na-compute mo na yung price ng isang common share, i-multiply mo ng number of common shares, iyon yung market value. Alright? Again, ang capital structure, it must be ratio and proportion based on market value. Sir, papaano po kung hindi naman binigay kung magkano ang market value? Or sir, wala namang paraan sa problem para makompute ang market value. Ano pong gagawin namin? Ganito pong gagawin ninyo. Okay? Ratio and proportion pa rin, but this time, it must be based on book value. Okay? Sir, anong ibig mong sabihin? Ganito po. Natatandaan mo ba yung bonds? Di ba may face value doon? Yung face value, iyon yung gamitin mo. Okay? Guys, yung preferred, di ba may par value? Yung par value ng preferred, iyon yung gamitin mo. Yung common, may par value, iyon yung gamitin mo. Okay? Ganito Guys, total face value of the bonds, total par value of the preferred, and then the total par value of the common, total. Okay? Book value. Anong gagawin mo? Ratio and proportion para makompute mo ang percentage. Again, most of the time, ang capital structure, ibibigay yan sa problem. Iyan ang normal circumstance. In the event na hindi yan ibibigay, at least we know how to work out. At ipapakita ko yan sa problem solving. Alright? This having been said, let us now proceed to the application proper problem number 12 now. Alright, problem number common equity. Anong gagamitin? Gordon or Cap? Kasi yan sa given information. Pag tiningnan mo ang given information, okay, Gordon ang pwede mong gamitin. Binigyan ka ng dividend, binigyan ka ng constant growth rate, okay? Binigyan ka ng market price. Gamitin mo ang Gordon. How do we compute? Dividend at year 1 over price at year 0 plus your constant growth rate. Guys, ang binigay na dividend 1.8 and it says last dividend. Ibig sabihin, yung 1.8 na dividend na binigay sa problem, that must be the dividend at year 0. That must be the dividend today. Kung iyan ang dividend today, how do you compute your dividend at year 1? Ilang percent ang growth rate? Okay, 5%. Therefore, 1.8 times 1.05. That must be the dividend at year 1. Ang price is 24. Ang growth rate ay 5%. Therefore, your cost of retained earnings, that must be 12.88%. That must be our answer to problem number 12. Yung first question, 12.88%. Kaya lang alam mo, may isa pang tinatanong weighted average costs of capital. And so, let us now proceed to the weighted average cost of capital. Paano yan kinocompute? Cost of debt after tax times the weight of the debt. Cost of preferred times the weight of preferred. Cost of common equity times the weight of common equity. Well, in this problem, binigyan ka ba ng cost of debt? Yes. Ang before tax cost of debt, 8%. Ang tax rate, 30%. E di ang after tax, 70%. It must be 70% of 8%. Or 8% multiplied by 0.7. Iyon yung cost of debt after tax. I-multiply mo sa weight ng debt. Ang sabi niya, ang target capital structure, 40% debt, 60% common equity with no preferred stock. Pwede naman Talaga namang may mga company walang preferred shares. Okay? Therefore, it must be. Ano man ang cost of debt after tax, ang capital structure ng debt 40% times 0.4. And then, ang iyong preferred wala. Guys, ang cost ng common equity na compute natin sa preceding slide, that was 12.88%. Plus 12.88% multiplied by the weight of common equity, which is 60%. Therefore, our weighted average cost of capital is 9.97%. Answer to problem number 12. Alright. Guys, may I ask you, among the cost of capital that we have, which do you think will always be the highest? And which do you think will always be the lowest? Okay, makinig mabuti ha. Ang laging okay, let me revise the question para mas maintindihan mo. Concept muna ang pag-usapan natin. Among the three providers of capital, lenders, preference stockholders, and common stockholders, among the three providers of capital, who bears the greatest risk? Sino ang may pinakamataas na risk? Lenders, preference stockholders, or common stockholders? I would like to know, among the three, ang may pinakamataas na risk, common stockholders. Sir, bakit? Kasi po, aasa lang sila sa matitira kung walang matira, biruin mo ang risk nun, kung walang natira, kawawa ka. Tama? That is the reason why. Kung ang common stockholders ang may pinakamataas na risk, sila rin po ang may pinakamataas na return. Okay? That is 12.88%. Okay? Guys, sino po ang may pinakamababang risk? Lenders. Kasi sa lahat-lahat ang unang binabayaran kapag nagkagipitan yung pinagkakautangan. Hindi pwedeng may pera yung may-ari, yung pinagkakautangan hindi nabayaran. Okay? In the case of liquidation, whenever we close the company, ang una pong binabayaran, yung lenders. Kaya nga, mababa ang risk. Mababa lang din ang return. Tingnan mo, 8%. Hindi lang yun. Tax deductible pa ang iyong cost of debt. Kaya nga guys, sa tatlong yan, ang laging pinakamataas ang return, common, kasi mataas ang risk. Ang laging pinakamababa ang return, yung lenders, kasi mababa ang risk. Okay? Mababa lang din ang return. Yung preferred, lagi siyang nasa gitna. Nasa gitna siya ng common at ng debt. Alright? And that is to illustrate problem number 12. Problem number 13. Addressing problem number 13, may I read? The following data pertain to Dana Industries. Interest rate on debt capital, cost of equity capital, before tax operating income, market value of debt capital, market value of equity capital, total assets, income tax rate, and current liabilities. Requirements are: compute Dana's weighted average costs of capital and compute Dana's economic value added. Alright? Guys, ang tinatanong sa atin, weighted average cost of capital and then the economic value added. Sir, paano natin kukomputen ang weighted average costs of capital? Are we provided with cost of debt and cost of equity? Yes, walang problema. Are we provided with capital structure? No. Hindi binigay ang capital structure, pero may binigay. Market value of debt capital and market value of equity capital. Di ba ang sabi ko, ang gagawin mo, ratio and proportion. Tama? Guys, hindi ba, say for example, this one, market value of debt capital 60M. Market value of equity capital 120M. E di ibig sabihin, ang total niyan 180 million. Tama? Guys, ilang percent ang debt? Ilang percent ang equity? 60 over 180, ilan yon? That is 33.33%. Okay? And then 120 over 180, ilan yon? That is 66.67%. Pero kahit wag ka nang mag-round off, ganitong gawin mo. Hindi ba ang weighted average cost of capital, this is computed. Cost of debt multiplied, cost of debt after tax multiplied by the weight of the debt. 9% ang debt cap, ang interest on debt capital. Kaya lang may tax rate na 30%, kaya multiplied by 0.7. Ito actually yung cost of debt after tax. Tama? Na i-multiply mo pa ng weight ng debt. Na ang weight ng debt, 60 over 180. Multiplied by 60 over 180, this one. Tama? And so, we have to add there to the cost of equity capital, 12% multiplied by the capital structure of equity, 120 over 180, multiplied by 120 over 180. Therefore, your weighted average cost of capital, that must be 10.1%. Iyan yung sinasabi ko kanina, in the event na hindi ibibigay sa atin kung magkano ang market value, then, kung ano ang capital structure, it is our task to compute. It must be ratio and proportion based on market value. Alright? Let's check. Number 2 is economic value added. Okay, makinig mabuti ha. I-discuss ko na ang EVA. Okay? Ang tawag natin dyan, EVA, Economic Value Added. Sir, ano ba yan? Okay? Makinig mabuti. Guys, kaya siya tinawag na EVA, Economic Value Added. Kasi po, okay, iyan ang net income ng economics. Okay? Sir, yung economics ba kasama sa CPA exam? Opo. Guys, in the subject management advisory services, economics is included in the CPA examination. Well, whenever we say EVA, economics value added, that is the net income of economics. Sir, paano po siya kinocompute? Iba pa sir, ang net income ng accounting sa net income ng economics, natural. Magkaiba yon, net income ng accounting and net income ng economics. Everybody, attention. Walang mangangabisado ng formula. Intindihin kung bakit nagkaganito. Alright? Your EVA is computed. NOPAT. Sir, what is NOPAT? Net operating profit after taxes. Again, pag sinabi mong NOPAT, that is net operating profit after taxes. Okay? Sir, ano ba yan? Okay, makinig mabuti ha. Tignan mo to. EBIT minus your interest expense, you get your EBT. minus your tax expense, you're going to get your net income. Ito ang computation eh. Ang EBIT, iyan ang operating income or operating profit. Pag sinabi mong no pot, okay, iyan yung EBIT after deducting taxes. Sir, paano ko computein? Okay? Say for example, ang iyong tax rate ay 30%. E di ibig sabihin ganito, ano man ang EBIT mo, i-multiply mo yon ng 0.7. Iyon yung no pot na tinatawag. Okay? Kasi guys, ang operating income, another term for which is operating profit. Tama? Ano man ang operating profit, bawasan mo ng taxes. Kung 30% ang tax rate, i-multiply mo ng 0.7. Ang tawag na doon, no pot. Net operating profit after taxes. Alright? Pag na-compute mo na ang no pot, ibawas mo yung, okay, all the costs of capital. Paano po yun kino-compute? Okay? Guys, buburahin ko muna to ha, para hindi tayo malito. Alright, minus total assets minus current liability. Guys, kung mapapansin mo, dito sa NOPAT, binawas na ba dito ang interest? Hindi pa. Kasi di ba ang NOPAT, EBIT times the after-tax rate. That is the NOPAT. Binawas ba ang interest? Hindi po. Sir, bakit hindi ibabawas? Kasi po ibabawas siya later. Okay, eto na nga. Makinig mabuti ha. What is TA? Total assets. What is CA? Current liab. Pag ang current liab, binawas mo sa total assets, anong natira? Okay, makinig ha. Tatlo ang natira. Sir, ano yung tatlong natira? Okay, current liab deducted from assets, ang natira non-current liab. Okay, ano pa? Preference shares. Ano pa? Common shares, NRE. Okay? Guys, ano ba ang costs ng non-current liab? Interest. Ano ba ang cost ng preference and common? Dividend. Okay? Guys, kaya nga kanina, hindi pa binawas ang interest kasi later on ibabawas. Ang mangyayari po ganito. Itong nasa parenthesis na ito, okay? Iyan yung tatlo. Non-current liab, preference, and common na i-multiply mo sa weighted average cost of capital. Guys, okay? Pag minultiply mo yan sa weighted average cost of capital, ang interpretation mo na dyan, ganito. Iyan yung interest expense plus the dividend. Okay? Iyan yung interest na binabayad natin sa non-current liab, iyan yung dividend na binabayad natin sa preference and common. Okay? Di ba natatandaan mo, dito sa NOPAT, hindi natin binawas ang interest kasi nga later ibabawas siya. Eh sir, ba't binawas ang dividend? Sa net income computation, iyon na nga ang sinasabi ko. Sa financial accounting, okay, ang dividend, direct deduction from retained earnings, hindi siya binabawas sa computation ng net income. Pero sa economics, ang dividends paid, binabawas siya to compute your economic value added. Because at the end of the day, cost pa rin yun eh. Nagbayad ka ng interest, nagbayad ka ng dividend, cost of pa rin yun ng business. Kaya ang economic value added, ibinabawas natin ang dividend. Nagkakaintindihan po tayo, ha? And so, this having been said, let us apply this to requirement 2. Okay? Guys, itong operating profit, 35 million. Ang tax rate, 30%. And the 35 million multiplied by 0.7. Okay? No pat. Ang total assets, 150M. Ang current liab, ilan? Current liab, 15M. Ano man ang difference, i-multiply mo ng WACC. Yung WACC na compute natin kanina, 10.33%. 10.1% rather. Alright, therefore, ang EVA ganito. Ang NOPAT, 24.5 million. Total assets minus current liab multiplied by WACC, 13.635 million. Sa madaling usapan, ang total interest and dividend, 13.635 million. To be deducted from no pot. Guys, meron bang natira? Yes. Ang economic value added, 10,865,000. That must be the computation of EVA. Iyan ang net income ng economics. Alright. Don't worry. Ay, teka muna. Hindi pala. Mali pala yung iniisip ko. Kasi ang iniisip ko, tapos ka na ng strategic cost management. Okay? Supposedly, yes. Kasi last semester, tinake mo ang strategic cost management. Dapat na-discuss mo doon ang EVA, under responsibility accounting. Okay? Kaya nga lang guys, I know, hindi iyan naturo. Kasi nga, early March pa lang of last semester, naka-quarantine na tayo. Hindi na tumuloy ang discussion, kaya hindi mo alam kung paano mag-compute ng EVA. At least, in your financial market, I was able to introduce what is EVA. Okay? Because this is very important, especially in CPA examination. You are supposed to know. Alright? And that is requirement number 2. Check nyo kung may tanong kayo before I proceed even further. Kung walang tanong, proceed tayo sa problem number 14. Alright. Cargo Corporation is expected to pay the following dividends over the next 4 years. 8, 6, 3, and 2. Afterwards, the company pledges to maintain a constant 4% growth rate in dividends forever. If the required return on the stock is 9%, what is the current price per share of common stock? Guys, binigyan ka ng dividend in the next 4 years. Starting year 5, ang dividend mo daw will normalize at a constant growth rate of 4% forever. Okay? Ibig sabihin, in the first 4 years given ang dividend, year 5, okay, tataas ang dividend ng 4% every year to infinity. Every year to forever. Okay? Ang hinahanap natin, current price of the stock or the market price today, the price at year 0. Alright? Guys, tandaan mo, kapag nagko-compute ka, okay? Kapag nagko-compute ka ng price, dapat ang gagamitin mong dividend yung year kung kailan nagsimula ang constant growth rate. Makinig mabuti ha, very important principle. Makinig. Pag nagko-compute ka ng price, dapat ang gagamitin mong dividend, yung dividend kung kailan nagsimula ang constant growth rate. Okay? Kailan ba nagsimula ang constant growth rate? Okay? It was in year 5. Therefore, pag nag-compute ka, dapat price at year 4. Bakit? Dividend at year 5. Nagkakaintindihan po ba tayo? Kung nagsimula ang constant growth rate ng year 7, anong price ang mako-compute mo? Year 6. Kasi ang gagamitin mo, dividend at year 7. Price at year 6 ang mako-compute mo. So, pag nag-compute ng price, ang gagamiting dividend kung kailan nagsimula ang constant growth rate. Okay, tandaan mo yan. Dahil sa quiz ninyo, panigurado, maraming ganyan. Alright? Guys, dividend at year 5 over your cost of RE minus your constant growth rate. Natatandaan mo pa ba yung computation natin na to last time? Yes. Okay? Guys, abay, paano mo naman ko-computean ang dividend at year 5? Well, actually, mako-compute mo ng diretso. Sir, papaano? Di ba binigyan ka ng dividend sa year 4, 2 pesos? Pagdating ng year 5, tataas ng 4%. E then 2 multiplied by 1.05. Ay, 1.04 kasi 4%. Okay? 2 multiplied by 1.04, that is the dividend at year 5. Ang cost of capital, 9%. Ang constant growth rate, 4%. Therefore, 2 times 1.04 divided by 5%, you get 41.6. This must be the price at year 4. Okay. Guys, kung ito po ang price at year 4, paano mo kukomputin ang price today? Okay, makinig mabuti ha. Magdo-drawing ako ng diagram. Okay, guys, ganito. Year 1, ang dividend is 8. Year 2, ang dividend 6. Year 3, ang dividend ay 3. Year 4, ang dividend 2. Okay, at the end of year 4, ang price at year 4, 41.6. Alright? Guys, anong gagawin mo? Lahat ng yan i-discount mo at present para makompute yung price at year 0. Kasi ang kinocompute natin, price at year 0, lahat ng yan i-discount mo at present time using your cost of capital. Sir, paano yung dividend sa year 5 and to infinity? Di ba iyon yung sinasabi ko last meeting na yung dividend mo sa year 5 to infinity, yung dividend mo sa year 5 to forever, nasa loob yon ng price at year 4. Kaya kasama po yung price at year 4 sa i-discount mo today. Okay? All your future dividends must be discounted at present. Okay na? Sige, tingnan natin. Anong gagamitin cost of capital? E the 9%. So what do we do? Computation of price at year 0. Year 1, magkano ang dividend? 8 pesos. 8 pesos multiplied by the present value of 1 factor at 9% for 1 year. Again, present value of 1 kasi hindi naman equal ang cash flow. You get 7.34. Year 2, 6 pesos times the present value factor at 9% for 2 periods. You get 5.05. Year 3, magkano? 3 pesos times the factor at 9% for 3 years. Therefore, 2.32. Year 4, magkanong i-discount sa year 4? Yung 2 pesos na dividend tsaka yung price na 41. And ang total 43.6 times the factor at 9% for 4 years. You get 30.9. Alam mo, when all of these are added together, it will provide the market price of the shares today. And that must be 45.61. Answer to problem number 14. That must be problem 14. Okay na? Punta tayo sa problem number 15. The Occidental Bank just issued some new preferred stock. The issue will pay an annual dividend of 3.6 in perpetuity, beginning 4 years from now. If the market requires a 6% return on this investment, how much is the price of one preferred share today? Okay? Guys, ang tinatanong sa atin sa problem number 15, magkano daw ang price ng isang preferred share today? Alright, guys, ang sabi niya, there will be an annual dividend of 3.6 in perpetuity beginning 4 years from now. Ibig sabihin, ang dividend natin magsisimula sa year 4. Okay? And that will be 3.6 in year 4 to forever, every year. Okay? Guys, bakit ito walang growth rate? Hindi naman to common eh. Ang may growth rate kasi sa dividend, yung common. Okay? Ang dividend kasi ng preferred, di ba hindi nagbabago? Kasi nga, di ba ang preferred may percentage. Kaya ang dividend niya naka-fix. Pero wala tayong dividend in years 1 to 3 kasi magsisimula lang ang dividend ng year 4. Okay? Guys, tandaan mo. Kung magsisimula ang dividend ng year 4, anong price ang mako-compute mo? Ang price na mako-compute mo, actually, year 3. Paano ka nga nagko-compute ng cost of preferred? Dividend over price. Okay, nagsimula ang dividend ng year 4. Ang mako-compute mo dyan, price at year 3. Alright? Guys, paano mo ko-computean ang price at year 3? Your price at year 3 is computed. Dividend at year 4 over costs of preferred. Again, your price at year 3 is computed. Dividend at year 4 over cost of preferred. Ang dividend at year 4, 3.6. Ang cost of preferred, 6%. Therefore, 3.6 divided by 6%, that must be the price of the shares at year 3, 60 pesos. Ganito. Okay, year 1, year 2, year 3. Ang price ng shares sa year 3, that is 60 pesos. Okay? Guys, sa loob ng 60 pesos, nandyan yung dividend in year 4 to infinity. Anong gagawin mo? I-discount mo yan at present time para ma-compute mo yung price at year 0. Anong gagawin mong discount rate? It must be equal to the cost of capital, which in this case is 6%. So what do we do? Okay? Your price at year 0 is computed. 60 pesos multiplied by the factor at 6% for 3 years. And that must be 50.38. That must be the price of the share at year 0. And that is problem number 15. Let us now proceed to problem number 16. Problem number 16, may I read? Texas Company's common stock is currently selling for 20 pesos per share. Security analysts at SG Specialists Incorporated have assigned the following probability distribution to the price of and the rate of return on Texas stock 1 year from now. Assuming that Texas is not expected to pay any dividends during the coming year, determine the expected rate of return on Texas stock. Okay? Guys, ang tinatanong sa problem number 16, expected rate of return on Texas stock. Guys, tinitignan mo kung ilan ang magiging return ng stock. At ang return ng stocks, depende po siya sa magiging price. And you are not sure kung ano ang magiging price 1 year from now. So how do I interpret the given information? Parang ganito. If the market price will be 16 pesos, there will be negative 20% return. And the probability that the price will be 16 pesos is 25%. If the price of the shares becomes 20 pesos, there will be no return. And the probability that the price of the shares will be 20 pesos is 30%. And so on and so forth. Alam mo, ang main concept, expected value. Sir, ano na naman ang expected value? Sa quantitative techniques in management, which is also part of the syllabus of management advisory services in the CPA exam. Meron tayong tinatawag na expected value. Pag sinabi mong expected value, that is the weighted average of the possible outcomes. One more time, that is the weighted average of the possible outcomes. Sir, ano ba yung mga possible outcomes? Ayan o, binigay sa iyo yung return. Pwedeng negative 20%, pwedeng 0%, pwedeng 20%, pwedeng 40%. Okay? Guys, iyan yung mga possible outcomes. Paano mo kukomputin ang weighted average? E de i-multiply mo ng probability. Okay? That's the expected value. That's the expected return. Okay? Therefore, we have addressing problem number 16. How do you compute your expected rate of return? Ano man ang return, okay? Ito kasi, listen ha, ito ang mga possible outcomes. Yung possible outcomes, pag minultiply mo yan ng corresponding probability, okay? Guys, pag minultiply mo yan ng corresponding probability, ang mako-compute mo yung, okay, expected rate of return. And so, expected return, negative 20 times 0.25, negative 5%, 0%, 5%, 8%, for a total of 8%. Sa madaling usapan, ang expected return on the stocks 1 year from today is 8%. Answer to problem number 16. Problem number 17. Tingnan nga natin. Donna has 3,000 invested in IABF with an expected return of 11.6%. 10,000 in IAS with an expected return of 12.8%. And 6,000 in IL with an expected return of 12.2%. What is Donna's expected return on her portfolio? Kung i-compare mo ang problem number 16 sa problem number 17. Okay, yung problem number 16, isa lang ang investment. Tapos, dun sa isang investment na yon, maraming pwedeng maging return. So, kinumpute mo yung weighted average, na-compute mo yung expected return. That is what we call a single investment subject to a standalone risk. Kasi kapag isa lang ang investment mo, okay, isa lang ang risk na kaharap mo. Pero alam mo, meron tayong tinatawag na portfolio. Sir, ano po bang ibig sabihin ng portfolio? Pag sinabi mong portfolio, this is a group of investments that you are holding. Ibig sabihin, ang investments mo, 2 or more. Sir, pagka may hawak tayong portfolio, ano ang dapat nating gawin? I-diversify. Sir, anong ibig sabihin mo sa diversify? Hindi pwedeng tatlo ang investment mo, lahat, okay, nasa tobacco industry. Kasi kapag baba ang tobacco industry, lahat ng investment mo, baba. Okay? Dapat, if you are going to make your investment, make it sure that it is across different industries. Say for example, okay, yung isang investment mo nasa education industry. Yung isang investment mo nasa food industry. Yung isang investment mo nasa tobacco industry. You have to diversify your investment so that it will equalize the return. Kasi kapag nakafocus ang investment mo sa iisang industry, pag lumubog yung industry na yan, patay ka doon. Alright? And so, paano natin ko-compute ang expected return on the portfolio of investment? Guys, talking about the three investments that we have IABF, IAS, and IL. Binigyan ka na ng expected return sa bawat investment. Ang gagawin mo na lang, kukomputin mo yung expected return on the portfolio. Sir, paano ko kukomputin? Okay? The ratio and proportion based on the amount of investment. If I may know, ang rate of return sa IABF, expected return is 11.6. Sa IAS, 12.8. Sa IL, 12.2. Binigyan ka ng amount ng investment sa IABF 3,000, IAS 10,000, and then IL 6,000. Ang total niyan, 19,000. Alright? Guys, anong gagawin mo? Ratio and proportion. Okay? Guys, paano mo kakomputin yung ER? It must be 11.6% multiplied by 3 over 19. Tama? 3 over 19, and then 10 over 19, and then 6 over 19. Ratio and proportion, basket approach. 11.6 times 3 over 19 is 1.83, 6.74, and 3.85%. Okay? Ang iyong expected return on the portfolio is 12.42%. Answer to problem number 17. Okay, problem number 18. Determine the beta of a portfolio consisting of equal investments in the following common stocks. Binigyan ka ng different security, Apple Computer, Coca-Cola, Harley-Davidson, Homestake Mining. Binigyan ka ng beta 1.15, 1.05, 1.5, and 0.5. Guys, kung binigyan ka ng beta, okay, ang tinatanong, beta of the portfolio, beta of this group of investment. Okay, ganito pong gagawin mo ha. Kapag binigyan ka ng beta sa bawat investment para makompute mo ang beta ng portfolio, ang gagawin mo ratio and proportion based on the amount of investment. Okay? Parang ginawa natin sa problem number 17. Ratio and proportion based on the amount of investment. Kaya nga lang guys, dito sa problem number 18, nagkataon equal investment. De 25% ang bawat investment, equal pala apat yan Tama? Gusto mo yung mga beta na yan, i-multiply mo ng tig to 25%. Okay? Or gusto mo, i-add mo yung apat, i-divide mo ng 4. Ganun lang din yun. Pwede either way. Okay? Tingnan mo. Iyan ang beta ng bawat investment. Okay, kung hindi equal ang investment, ratio and proportion based on the amount of investment. Nagkataon equal, kaya ang ginawa ko, in-add ko yan, na-compute ko ang total. I-divide ko ng 4 para ma-compute ko yung beta ng portfolio. Pero walang pinagkaiba yon kung itong apat na ito, i-multiply mo ng tig to 25% kasi equal investment. Kapag yung apat na ito, i-multiply mo ng tig to 25%, ganun lang din ang lalabas, 1.05. And that is our answer to problem number 18. Alright, let me now proceed to problem number 19, a very comprehensive problem to finally close this handout. Johan Corporation is expanding its research and production capability to introduce a new line of products. Current plans call for the expenditure of 100 million on 4 projects of equal size, 25 million each, but different returns. Project A is in blood clotting proteins and has an expected return of 14%. Project B relates to a hepatitis vaccine and carries a potential return of 12.5%. Project C dealing with cardiovascular compound is expected to earn 11.8%. And Project D, an investment in orthopedic implants, is expected to show a 10.5% return. Okay, the firm has 15 million in retained earnings. After a capital structure with 15 million in retained earnings is reached, in which retained earnings represent 60% of the financing. All additional equity financing must come in the form of new common stock. Okay, bago ko tumuloy in reading the problem, paliwanag ko muna ang first two paragraphs. Everybody, attention. Okay, guys, ang sabi sa first two paragraphs, you are considering for investments of equal size. Apat na investment. Project A, Project B, Project C, Project D. Ang cost ng bawat isang investment, 25 million. Ibig sabihin, if you push with these 4 investments, you will need 100 million all in all. Alright? Abay 100 million, saan manggagaling ang pera pang-finance ng apat na project? Abay marami tayong capital sources, may debt, may preferred, may common. Tingnan natin kung anong present sa problem. Ang sabi sa second paragraph, you only have 15 million in retained earnings. Okay? Guys, di ba yung apat na project ang kailangan mo 100 million? Kung ang RE mo 15 million lang, definitely hindi sapat ang RE para i-finance ang project. Pag naubos ang retained earnings, anong gagawin mo? Mag-i-issue ka ng panibagong common stock. Na kapag nag-issue ka ng panibagong common stock, tataas ang iyong cost. Remember our straight problem? Ang sabi ko, ang cost ng new common stock is always higher than the cost of retained earnings. Okay? Kasi talagang darating yung time mauubos yung RE kasi 100 million ang nire-raise natin na pondo. Nagkakaintindihan tayo, ha? May I continue reading the last two paragraphs? Common stock is selling for 24 pesos per share, and underwriting costs are estimated at 3 pesos if new shares are issued. That must be your flotation cost. Dividends for the next year will be 2 pesos per share. That is dividend at year 1. And earnings and dividends have grown consistently at 6%. The yield on comparative bonds has been hovering at 9.2%. The investment banker feels that the first 20 million of bonds could be sold to yield 9.2%, while additional debt might require a 2% premium and be sold to yield 11.2%. The corporate tax rate is 40%. That represents 40% of the capital structure. Before I even proceed, may I explain the last two paragraphs? Okay? Guys, kanina ang sabi natin ang RE 15 million lang. Definitely hindi sapat ang retained earnings to finance the 4 projects. Ang sabi niya, ang iyong bonds at present 20 million lang. Okay? Ang cost ng bonds na 20 million ay 9.2%. Definitely, yung 20 million na bonds hindi pa rin sapat. Abay, 15 million ng retained earnings, 20 million na bonds, 35 million lang yon. 100 million ang nire-raise mong pondo para i-finance yung apat na project. Pag naubos ang RE, mag-i-issue ka ng panibagong common stock. Pag naubos yung existing bonds, mag-i-issue ka ng panibagong bonds. At tandaan mo, kapag nag-issue ka ng panibagong bonds, tataas ang iyong cost. Kasi dati 9.2% lang okay? Ang iyong cost doon sa first 20 million. Kung mag-i-issue ka ng panibagong bonds, ang cost mo will be 11.2%. There will be an additional 2%. Alright? Guys, let us settle the requirements. Ang una pong tinatanong sa atin, what is the weighted average costs of capital? Alright, tingnan nga natin. Analysis of the case, initial costs. Guys, anong ibig sabihin ko sa initial costs? Pag sinabi kong initial cost, iyan yung costs ng existing funds. Iyan yung cost nung existing bonds, iyan yung costs nung existing retained earnings. Magkano ang cost ng existing bonds? Di ba ang kailangan natin cost of debt after taxes? Meron tayong 20 million bonds na ang cost nun ay 9.2%. Kaya lang kung after tax ang kailangan natin, ang tax rate ay 40%. Therefore, 9.2% multiplied by 0.6, you get 5.52%. Alright, cost of debt after tax is 5.52%. Guys, ano ang cost ng retained earnings? As at present, meron tayong 15 million in RE. Tama? Yung 15 million in retained earnings, magkano ang cost nun? Paano natin kukumputin? Ano bang binigay sa problem? Okay? Yung given sa problem, ang pwede nating gamitin, Gordon model. Dividend at year 1 over price at year 0 plus your constant growth rate. Dividend at year 1 given, it must be 2 pesos. Price at year 0 given, 24. Growth rate is given, that is ilang percent? 6%. Therefore, our cost of retained earnings, that must be 14.33%. You have your costs of retained earnings, 14.33%. Iyan ang ating initial costs. Ibig sabihin, ang costs after tax nung 20 million na bonds, 5.52%. Ang cost ng retained earnings, 14.33%. Okay? Guys, there will come a time. Mauubos yung 20 million na bonds. Pag naubos yung 20 million na bonds, anong gagawin mo? Mag-i-issue ka ng panibagong bonds. Pag nag-issue ka pa ng panibagong bonds, mag-iiba ang iyong cost. Yung 9.2 magiging 11.2%. Tama? Therefore, you have over here, analysis of the case, additional issuance, 11.2% times 0.6 is 6.72%. Dati, 5.52% lang. Pag nag-issue ng panibagong bonds, ang magiging cost natin, 6.72%. Alright? Guys, pag naubos ang RE na 15 million, mag-i-issue ng new common stock. Paano ka nga nagko-compute ng cost of new common stock? Dividend at year 1 over price at year 0 minus flotation, add thereto your constant growth rate. 2 over 24 minus 3 plus 6%. You're going to get 15.52%. Cost of new common stock is 15.52%. Okay. Guys, pakinote mo lang yung apat ha. Yung initial cost natin sa debt 5.52, sa equity 14.33. Yung subsequent cost natin sa debt 6.72, sa equity 15.52%. We are going to need this information as we address down the requirements of the problem. Alright, ang una pong tanong, what is the weighted average costs of capital? Well, talking about your weighted average cost of capital, guys, kaya siya tinawag initial WACC. Initial WACC because it must be based on the initial funds. Okay? Ano ba ang cost ng initial funds? Ilan ba ang cost of debt after tax initially? 5.52. Ilang percent ang debt? Ang sabi diyan, ang debt daw 40% of capital structure. Kung ang debt 40%, natural, ang equity, that must be 60%. Kasi wala namang preferred in this problem. Tama? And so, guys, again, ang gagamitin ko sa pag-compute ng initial WACC, it must be the initial costs. 5.52% multiplied by 0.4 plus 14.33% multiplied by 0.6. That must be 10.81%. Initial WACC is 10.81%. Pakinote mo yan, ha? Alright, number 2. Again, itong 5.52 initial cost of debt and itong 14.33 initial costs of equity. Punta tayo sa requirement number 2. At what capital structure size will the firm run out of retained earnings? Alright? Addressing requirement number 2. Gaano daw sa Tagalog? Gaano daw kalaki ang investment para maubos ang retained earnings? Again, addressing requirement number 2, gaano kalaki ang investment para maubos ang retained earnings? At what size of capital structure is the firm going to run out of RE? Okay, makinig mabuti. Guys, every time na mag-i-invest po tayo, dalawa ang pinanggagalingan. May nanggagaling sa debt, may nanggagaling sa equity. Ang debt 40%, ang equity 60%. Alright? Guys, ang ating RE at present, ang equity kasi natin ngayon at present yung RE na 15 million. Tama ba? Yes, 15 million. Ang RE natin 15 million. Ang tanong, gaano kalaki ang investment para maubos yung 15 million na retained earnings? At what size of capital structure will the firm run out of RE? Okay? Guys, magkano ang investment? E de 15 million divided by 0.6. Tama? You're going to get 25 million. Tama ba? 25M. Guys, 15 million divided by 0.6, 25M. Ibig sabihin guys, kung 25 million ang investment, 10 million dapat manggaling sa debt. 15 million dapat manggaling sa equity. Iyon ang ibig sabihin nun. Ang tawag po natin dyan, retained earnings breakpoint. Para bang break-even point in cost volume profit analysis. Tama? Kaya siya tinawag na retained earnings breakpoint kasi iyon yung size ng investment na mauubos lahat ng retained earnings. And that must be 25 million. Isipin mo, kung 25 million ang investment, 15 million ang kailangan ko sa equity. Ang RE ko, 15 million. Ubos ang retained earnings. Tama? Therefore, your retained earnings breakpoint is computed. 15 million divided by 0.6. Therefore, you get 25M. Answer to requirement number 2. Requirement number 3. What will the marginal cost of capital be immediately after that point? Alright, makinig mabuti. After this point, sir, anong point? After 25 million. After 25 million, what is your marginal cost of capital? Okay, sir, ano ba yung marginal cost of capital? Okay, ganito po siya. Initially, WACC ang tawag mo. Weighted Average Costs of Capital. Pag nagbago ang WACC, ang tawag mo na MCC, Marginal Costs of Capital. Alright? Guys, after 25 million, ang tanong ko, kailangan mo na bang mag-issue ng panibagong bonds? Hindi pa. Sir, paano mo nasabing hindi pa? Di ba? At 25 million, 10 million lang na bonds ang magagamit mo. E di ibig sabihin, may natira pa. Ibig sabihin, pag lumagpas ka ng 25 million after this point, kailangan na bang mag-issue ng panibagong bonds? Hindi pa, may natitira pang bonds. Ang tanong ko, after 25 million, kailangan na bang mag-issue ng panibagong shares? Natural. Sir, bakit? Abay, at 25 million, ubos na yung retained earnings na 15 million. Talagang mag-i-issue ka ng panibagong common stock. Okay? Ibig sabihin, hindi pa ako mag-i-issue ng panibagong bonds. Meron pa akong bonds. Mag-i-issue na ako ng panibagong common stock. Magbabago ba ang cost? Definitely. Okay? Therefore, addressing requirement number 3, we now call this as marginal cost of capital. Okay, anong gagamiting cost of debt? Yung luma o yung bago? Yung luma. Kasi hindi pa mag-i-issue ng panibago. 5.52% multiplied by 0.4. Guys, anong gagamiting cost of equity? Yung luma, yung bago? Yung bago. Abay, bakit? Mag-i-issue na ng new common stock. Magkano yon? Ilang percent yon? 15.52%. Tama? Therefore, plus 15.52% multiplied by 0.6. You're going to get 11.52%. Ano yan? Old debt, okay, but new equity. 11.52%. Okay ka na? Requirement 4. At what capital structure size will there be a change in the cost of debt? Alright, guys, addressing requirement number 4. Ang tinatanong niya, kailan magbabago ang cost of debt? Makinig mabuti. Magbabago ang cost of debt kapag nag-issue ka na ng panibagong bonds. Ang tanong, kailan ka mag-i-issue ng panibagong bonds? Kapag naubos ang existing bonds. Ang tanong, gaano kalaki ang investment para maubos ang existing bonds? Okay? Guys, kung kanina sa requirement number 2, ang hinanap natin retained earnings breakpoint, gaano kalaki ang investment para maubos ang RE? Dito sa requirement number 4, gaano kalaki ang investment para maubos ang existing bonds. Okay? And so we have. Alam mo kasi, ganito po siya. Makinig mabuti, ha? Di ba every time na mag-i-invest ka, may portion sa debt, may portion sa equity. Sa debt, 40%. Sa equity, 60%. Ilan nga ang bonds natin at present? 20 million. Okay? Ang tanong, gaano kalaki ang investment para maubos yung bonds na 20 million. Eh de 20 million divided by 0.4, ilan yon? 50 million. Tama? You have over here 50 million. Ibig sabihin, kung 50 million ang investment, mauubos ba ang bonds? Yes. Eh kasi 50 million times 0.4, 20 million. Kung 50 million, okay, kung 50 million ang investment, 20 million manggagaling sa debts, 30 million manggagaling sa equity. Definitely at 50 million investment, mauubos ang existing bonds. Anong tawag natin dyan? Bonds breakpoint. Again, parang break-even point. Gaano kalaki ang investment para maubos ang bonds? Alright? And so, guys, teka muna ha. Titignan ko nga muna kung ilan yung tawag dito kanina. Yung MCC kanina. Ay, sorry. 11.52%. Ino-note ko lang ha kasi kailangan ko to later eh. 11.52%, that must be your marginal cost of capital. Okay? I will need that. Requirement number 4, bonds breakpoint, that is 20 million divided by 0.4 is 50 million. Again, ang ibig sabihin, kung 50 million ang investment, mauubos ang existing bonds. Requirement number 5. What will the marginal cost of capital be immediately after that point? Sir, anong ibig sabihin nun? Okay? After this point, after 50 million, ano na daw ang marginal cost of capital? Tanong, magbabago na ba ang cost of capital? Yes. Bakit? After 50 million, kailangan mo na bang mag-issue ng panibagong bonds natural? Eh kasi ubos na ang bonds. Gagamitin mo na yung panibagong cost of debt. After 50 million, kailangan mo na bang mag-issue ng panibagong shares natural? Sa 25 million investment nga, wala ka ng retained earnings. Tama? Therefore, addressing requirement number 5, anong gagamitin mo? Bagong cost of debt na kasi ubos na ang bonds. 6.72%, okay? Multiplied by 0.4. And then, ito, new debt. Okay? This is new debt. Itong 15.52% new equity, natural, mag-i-issue ka na naman ng panibagong equity kasi nga ubos na ang existing retained earnings. Alright? Ilan yan? 12%. Alright. Requirement number 6. Based on the information about potential returns on investments in the first paragraph and information on marginal cost of capital in parts 1, 3, and 5, how large a capital investment budget should the firm use? Ang tinatanong sa requirement number 6, okay, how large will be our capital budget? Guys, ang capital budget po nakadepende kung ilang project ang tatanggapin natin. Kasi ang isang project 25 million. Ngayon, kung tatanggapin mo yung 4 na project, okay, ilan yon? E de 100 million ang capital budget. Kung 3 project lang ang tatanggapin mo, 75 million. Kung 2 project ang tatanggapin mo, 50 million ang capital budget. Therefore, ang capital budget depende kung ilang projects ang i-accept. Eh sir, paano ko po malalaman kung anong project ang i-accept, kung anong project ang i-reject? Ito na ang decision making. Alright? Makinig mabuti. 4 ang project. Project A, B, C, D. Binigyan ka ng expected rate of return. Okay? Expected rate of return sa first paragraph. Anong sabi? Ang Project A, 14%. Project B, 12.5%. Project C, 11.8%. Project D, 10.5%. Actually, in order. Kasi guys, dapat ang priority mo palagi yung project na may mataas na expected rate of return. In order yan, 14%, 12.5%, 11.8%, 10.5%. Tandaan mo, ang bawat project, 25 million. Okay? Iko-compare mo yan sa required rate of return. Sir, ano ba yung required rate of return? Iyan yung WACC or the MCC, the marginal cost of capital. Okay. Guys, talking about your required rate of return, hindi ba kung project A lang ang pipiliin mo, 25 million. Tama? Guys, kung project A, 25 million. Kung 25 million ang project A, kailangan mo bang mag-issue ng panibagong bonds? Hindi. Kasi di ba sa 25 million, okay, sa debt 40%, sa equity 60%. Tama? Guys, ito 10M, ito 15M. Okay. Kung 25 million ang project A, kailangan mo bang mag-issue ng panibagong bonds? Hindi. Kailangan mo bang mag-issue ng panibagong shares? Kung 25 million ang project A, hindi pa rin. Sir, bakit? Kasi di ba sa 25 million, 15 million, okay, ang equity. Di ba may RE tayo na 15 million? Ibig sabihin, kaya kong i-finance si project A. Hindi ako mag-i-issue ng panibagong bonds. Hindi ako mag-i-issue ng panibagong common stock. Kasi, kung i-finance ko si Project A, saktong-sakto ang retained earnings na meron ako. Therefore, hindi ka mag-i-issue ng bonds, hindi ka mag-i-issue ng shares. Anong gagamitin mo? Yung WACC. Tama? Ilan yung WACC na yon? Kung natatandaan mo, iyon yung sagot natin sa requirement 1, and that is 10.81%. Alright. Eto na nga po ang sinasabi ko. Makinig mabuti, sir, paano ko yan i-analyze? Alright? Guys, kasi ganito. Assets are equal to liabilities plus equity. Non-current liab, preference shares, ordinary shares, and retained earnings. Saan ang gagaling yung pera? Dito sa apat na ito. Hindi ba? Yung pera, i-invest ko sa asset. Pag in-invest ko sa asset, kikita. Tama? Guys, tingnan mo si Project A. Pag in-invest ko ang pera, kikita ng 14%. Ano ba yung WACC? Iyan yung, okay, binabayad mo sa capital. Okay? Ang ibabayad ko sa capital, 10.81%. Simple example. Bumili ko nangutang ako 100,000. Ang binabayad ko sa utang na interest, 10.81%. Yung 100,000 na yan, ilalagay ko sa investment. Ang investment, kikita ng 14%. Tanong, accept or reject? Abay, natural, accept. Kasi ang kikitain mo, 14%, pero ang binabayad mo lang sa capital, 10.81%. Therefore, accept the project. Worth investing. Tama? That must be the decision. Accept. Okay. Ibig sabihin, pwede si Project A. Tanong, kung isasama mo si Project B, our next priority, magkano na yan? 50 million. Kung 50 million kasama si Project B, ang tanong ko ngayon, kailangan mo bang mag-issue ng panibagong bonds? Tingnan nga natin, 50 million, 40% debt, and then 60% equity. Tama? Alright, kung 50 million, 20 million sa debt. Okay? And then 60%, 30 million sa equity. Makinig. Kung dalawang project, A and B, 50 million, kailangan mo bang mag-issue ng panibagong debt? Hindi. Sir, bakit hindi? Kasi 'di ba kung 50 million ang project, 20 million lang ang kailangan mo sa bonds. Magkano ba ang bonds na meron ka? 20 million. Hindi ka pa mag-i-issue ng bonds. Sir, mag-i-issue na ba ako ng common shares? Yes po. Bakit? Kasi di ba 30 million ang kailangan mo sa equity, yung 15 million nga lang ang meron ka sa retained earnings. Okay? Therefore, talagang mag-i-issue ka na ng panibagong common stock. Okay, hindi ako mag-i-issue ng bonds. Mag-i-issue ko ng panibagong common stock. Ano yon? Old debt, new equity. Iyon yung sagot natin sa number 3. Okay? Ilang percent? 11.52%. Tanong, accept or reject? Accept. Abay, sa capital ko, ang binabayad ko 11.52%. Yung pera, pag ininvest sa asset, kikita ng 12.5%. Accept the project. Okay. Ibig sabihin, pwede palang tanggapin si A and B. Tingnan nga natin, idamay natin si C. Kung idadamay natin si C, edi magkano na yan? 75 million. Okay? 25, 25, 25, 75 million. Kung 75 million, kailangan ko na bang mag-issue ng panibagong debt natural? Sa 50 million, ubos na ang debt. Sa 75 million, kailangan ko na bang mag-issue ng panibagong equity natural? Anong gagamitin kong marginal cost of capital, sir? Yung new debt, new equity. Iyon yung sagot natin sa number 5. 12%. Okay. Sige nga, i-analyze mo ito. Sa capital mo, ang binabayad mo 12%. Yung pera, pag ininvest sa asset, ang kikitain 11.8%. Lugi. Okay? Kasi mas mataas yung ibabayad mo kaysa sa kakabigin mo. Therefore, ang project C, reject. What about project D? Abay, mas lalo nang hindi pwede. 12% pa rin yan. Bakit ka mo? Abay, pang 100 million yan eh. Mag-i-issue ng panibagong debt, mag-i-issue ng panibagong equity, 12%. Okay? Ang kikitain mo lang 10.5%, therefore reject. Therefore, if I may note, the decision making. Decision, A and B, accept. C and D, reject. Magkano ang capital budget? That must be 50 million. Answer to requirement number 6. And that is to illustrate our straight problems in risk, returns, and capital structure. Kindly check if you have questions. One more time, if in case you will have your questions after watching this uploaded video lecture, then you may leave your message and I am going to answer your concerns whenever I get the message. All right? Now, again, our updated schedule, we are going to have our quiz by next week and by next week. Okay? Quiz 1 and quiz 2, all about risk, returns, and capital structure. Thank you very much for watching and thank you very much for your time. I hope you learned something from this uploaded video lecture. Mag-ingat po kayo palagi. Maraming salamat po. Bye-bye!